So let's take the chat on markets forward with Aditya Arora, who is joining us now from Ahmedabad, Adilic Advisors. Aditya, what's your view on the market right now? Nifty, Bank Nifty, how would you trade and what's your positioning? Are you in with positions? Are you looking to make positions, or are you sitting out right now?
Very good noon to you and to everyone. So we are positioning in the market in such a way that probably it will shock many of the market participants out here. But we are preparing for 1,000 to 4,000 point of correction in Nifty post-election. The reason for the same is that a lot of people have priced in great, growth in markets post-election because obviously BJP government may come to the power. Market is pricing in that kind of an outcome. And if you look at P multiples of various stocks and sectors, then it is touching stratosphere level. It is touching sky high levels. So we feel markets are pretty overvalued in terms of P ratio, price to book ratio, and technically also I think markets are very expensive. So our theory of correction of 1,000 to 4,000 point of correction is from the top. If we see good outcome in the election, there could be a short-term spike in the market. So whatever is the top for the market, from there we see correction of 1,000 to 4,000 point. We can see froth all over the place, mid caps, small caps, and large caps also. Although large caps are already correcting, if we look at FI figures, then they are consistent seller in cash market since a long time. So and what are the factors which are adverse for the market or negative for the market? One, overvaluation. Second, geopolitical risk. Third, election in India and USA. So all three factors create a cocktail which creates a scenario which is very profitable for the short seller. So we are creating short positions in the market on the rise, and we see good correction in stock specific counter and overall market also as such.
Right, so that's your take coming in on markets, and definitely not sounding great actually. Aditya, if you look at the way how the words you've used, overvalued, you are seeing froth. So, is there any pocket of safety that you're seeing? And also, particularly, let's talk about the broader markets then, because the pain there is pretty sharp. We are seeing kind of a repeat of what we had actually seen towards the end of March or early April, isn't it?
True. I think certain sectors which usually outperform in such times are pharma and FMCG sectors, which are defensive in nature. And one more sector which stands out is metal sector. Globally, if the rally continues in metal counters, international metals like copper, zinc, aluminium, then rally in metal counters will continue in India. But there are two sides of the coin over here. Even if the global macros are good for metal sector, but global markets are correcting, Indian indices are correcting, then it becomes little difficult to make money. So there are times when it's very easy to make tons of money, and there are times when it's difficult to even make few pennies. So this is such a time, and election comes in once in a five-year time. So at that time, the volatility is max. We can also see India VIX jumping 10 to 20 points from here. So that will again create a lot of volatility. So best way, traders and investors can position themselves is that just wait on the sidelines. Maximum they will lose is, little bit of, upside if there's any. And if there's a downside, they can protect the capital. And a lot of stocks will be available at the lower levels. So then a quick dash from there could easily make them 5 to 10%. So the best strategy right now would be stay on the sidelines.
Okay, which means clearly you don't have any picks also, because our second question was that do you have any trading ideas? If I put a gun to your head, compulsive trading, would you short market? You're sounding cautious. Do you have any short ideas?
I said, in election, there could be a bump up, there could be a spike. From there, that would be an amazing short selling opportunity because you already have the good news out of the bag. There's no better news than that. From there, the stop loss would be very small and the targets could be huge. And one more thing, to discuss is that trades could be there on different time frames. That could be 1 to 2 weeks, 1 month, and on 3 to 6 months. So currently, as I said previously, FMCG sector looks good. So I think Britannia is a good buy over there.
7% rebound. Now, after that 7% kind of rally which has come in today, or is there a level on which you would recommend buying Britannia?
I think one could buy at current levels because money is flowing into this stock, and money is flowing out of certain stocks, and FMCG has seen great underperformance since a long time. So there's a mean reversion trade in all the undervalued sector like FMCG, chemical, pharma. So Britannia is a good buy even at current levels. So this could be bought at 5130. 4830 would be the stop loss and 5430 would be the target. Again, over here, I'm pointing towards outperformance compared to the market. I'm not pointing towards complete outperformance because market nature is choppy right now.
Let you go, very quick word. We've got a full analysis lined up on what happened in PSUs today, triggered by PFC REC. And Soumit is joining us. He has exclusive details on the management side, some top brokerages we spoke to. We'll get all of that. But before that, before we let you go, chart check on REC PFC. If in today's panic low, any trader viewer would have got into the name 10% lower, look at the intraday chart, if you could get back there. Where do you think it is heading now? Okay, some 4.5-5% recovery from lows. But do you think this can recover further? Would you hold on to it? What would your take charts, reading of the charts be on REC PFC?
I would start with a disclaimer that we have already suggested certain trades in these counters at start of the day. So one must take their own, do their own analysis before going ahead. Our view is that probably the top is in for electricity counters like REC PFC. If you look on valuation, from valuation point of view also, then these counters are pretty expensive, and technically also the resistance for the PFC is about 480-500. I don't see great scope of rally from current levels of 443 and even beyond 500. So these levels are actually selling point for these counters, and I see a downside of about 10 to 20% from here in the medium term.
All right, so that's the take coming in on PFC REC. Thank you so much, Aditya, for joining us on the show, talking about the markets, especially these two counters, and talking about PFC REC.
If you like this video, then like, share and subscribe to ET Now.